Hi there, welcome back to Closing Trades. Just taking a look at where we are at when it comes to the markets. Last 30 minutes or so left of trade, and Nifty 50 0.5% higher. It's been very range bound. We've in fact not even been able to cross that 24,750 mark. If you bar that earlier blip that we had seen, wherein we were almost as high as 24,900s thereabouts, but we've slipped from the day's highest point. But nonetheless, we're back in the range where we have been all day. So that little bit of a push that the Nifty had seen on expiry day has all settled out, and basically that's where we are at when it comes to the markets right now. Sensex 2 in tandem, India Wix another cool off of almost 4% rather that we are seeing today, and Nifty Bank as flat as it could be. So that's what the market construct is looking like right now. We have Kunal and Jatin who are back with us on the show today. Kunal, I couldn't help but notice SRF is at its all-time high amid a lot of other stocks, but it's really been these fertilizer stocks that have been in the spotlight for various reasons, like the monsoon, or you have chemicals that are in focus, and on the back of that, fertilizer stocks have been doing well. Give me a sense of what SRF is predicted to do on the charts. How is it shaping up? Because it has been a very good year, 6 months, 3 months, whichever chart you pull up for SRF, it's been very good moves. Do you see this sustaining, or do you believe that the chemicals or the fertilizer space are here from here on are expected to do well?
Well, they seem to be, staying. In fact, SRF was one of the recommendations which I had given yesterday as well as today, because my expectation was that the stock, after quite some time, has found its mojo back. Not a surprise that the stock has hit fresh highs for itself, crossing 3,100 plus mark quite comfortably. My sense is that we are looking at a point where many of the specialty chemical stocks are starting to show signs of a revival or a breakout. SRF has been one of the top performers, not just in this last 3 months of this market rally, but then even prior to that. So I remember, I think 2024-25, when the markets were going through a sharp correction, SRF was one of the first stocks to actually come back and make a fresh high, or it was trading closer to the lifetime high levels itself. So the stock had already shown a lot of resilience in the last many months. So I think it was just a matter of time that the stock found its mojo back and came out of a minor consolidation. I think also, on the other hand, there are other specialty chemical names, the likes of, for example, Aarti Industries. That stock is looking attractive. Atul, that's a chart which I think is looking extremely strong at current levels of 7,100, 200, where it's trading right now. So there are a lot of names which are looking very attractive. And my sense that this could be a space as well as a sector which could actually perform very well over the near to medium term.
So that's the take on the fertilizer space. Kunal believes that this space could do very well, and including SRF, this stock could also do very well going ahead. But Jatin, I want to come to you and give us an idea of where you are seeing the entire Nifty metal sector headed. Today, we also have a note that's come in from Antique, wherein they say that domestic steel demand remains strong. Now, we know that the threat of tariff is largely looming on this sector, and give us a sense of where you're seeing Nifty metal, because it's not been all that bad, but it's not even been all that good for Nifty metal in the recent times.
Yeah, so recently there has been a lot of news flow around these metal space globally as well. So we believe that overall there are pockets of strength where we are seeing opportunities within the metal pack. One of them being Jindal Steel. So post a sharp run up, it is consolidating since last 3 weeks. Now it has reached its crucial support of the 20-day average. So we believe that the risk reward now favors going long in something like Jindal Steel, which is looking positive from a short-term perspective. The ideally the stop loss should be placed around 930, and on the upside we can expect levels of 1,000. So overall, we believe that it has undergone a bit of consolidation, but now considering that it has reached its crucial support, we should see a next leg of the up move in the Nifty metal index as well as the Nifty, the metal stocks.
View on the metal space. We also have Mayuresh Joshi, Head of Equity at MarketSmith India, joining us. Mayuresh, hi, good afternoon. Always a pleasure chatting with you. Give us an idea of where you are seeing the entire quick commerce, quick delivery, food delivery space headed. Just today, we have a very bullish note coming in on Zomato, wherein CLSA has maintained a high conviction outperform on the stock. It's also one of their picks, and this is on the back of the weekly active user metric that CLSA has been tracking, and it's been doing well for Eternal. The past couple of trading sessions, you've had the spotlight on Swiggy. Today, suddenly you have Eternal that's back in focus. And amid both of these highly competitive players, somewhere you're also hearing news flow that Zepto is delaying its IPO. So give us a sense of where you're seeing competition shape up in this industry and who would at the end emerge victorious or where?
Very good afternoon. I think it's about perspective, right? Because if you probably have a larger time landscape and a horizon kept in place over the next 4 to 5 years, obviously the expectations in terms of core metrics, whether it's the food delivery business or whether it's the quick commerce business, is expected to garner further steam. Because what you're probably seeing in metro areas right now will get penetrated and extended to tier 1, tier 2 cities as more discretionary spending comes through. And therefore, I think the scope and the opportunity that all these players probably have are relatively large. Having said that, I think both players are in a very aggressive capex mode to improve and increase their dark stores, in fact, double their dark stores over the next 4 quarters. And therefore, I think the kind of expectations that one really has from an earnings perspective and from a cash flow perspective, they're definitely going to take a hit. You've obviously seen that in numbers. Specifically for Eternal, as well as Swiggy to a large extent. And let's not forget competition. So to that extent, I think as cash flows get dampened because of all these factors at play, competition is also brewing up pretty strongly. So you've seen Jio and JioMart actually expected to expand its operations, the pilots that they're probably running. We don't know how the Amazon pilot is expected to take place. And we are hearing from a few large multi-retail stores actually starting to have their own ecosystem as far as deliveries are concerned. But the bottom line is there is sufficient tailwind, as I said, over a longer periodicity of time in terms of a lot of dynamics at play. The ordering activity in terms of the number of customers, the expectations of the size per order, and therefore the expectations that one really lays out in terms of the margin profile and performance, both in terms of the food delivery as well as the quick com business, is something which will remain steady and improve. However, at this point of time, my own sense is that numbers will be a little bit soft because of all these factors at play. But again, I think stocks like an Eternal, as an example, I think they should come back and bounce back very, very smartly by the end of this year, once largely the capex program and the opening of the dark stores is probably done and dusted with. So I think, yes, ratings, rankings look fine as we speak at markets per end, and therefore I think this is one stock that we need.
Okay, so bullish call on Eternal, and numbers are expected to be soft for a little bit ahead is the word coming in from Mayuresh. But Mayuresh, hold that thought because let's address the auto space. On the sidelines of the CM conference, Samir Dixit caught up with Vikram Gulati of Toyota Kirloskar Motor, who lauded the new EV policy and also chimed in on the impact of China's chokehold on rare earth magnets. Let's go across and listen into that interaction.
Well, India has been a very resilient country. I think our automotive sector is also very resilient. It is a matter of fact that if you look at the global capacity for rare earth magnets or the rare earth processing, the primary 90% for magnets and around 85% for the raw material lies with the one particular country. That's a fact. And therefore, if there are some certain conditions put up, it applies to everybody world over, and that to India as well. It is also a fact that rare earth as well as magnets from rare earth are now finding a lot of applications across various industry sectors, including the automotive. The use is definitely going up with electrification because the electric vehicle does need a significant amount of rare earth magnets for the motors, etc. Although there is also application for other technologies, including ICE. I think for us, the key takeaway as a nation is what Government of India and the Honorable Prime Minister has been focusing on, which is the need to become self-reliant. Okay. And also the fact that the government has been talking about multiple technologies being applied in our quest for self-reliance towards energy and sustainable mobility, because there are other technologies which can very impactfully today play that role of lowering fossil fuel consumption, carbon emissions and pollution.
Well, indeed, that's a really pressing matter right now. And let's also go back to Mayuresh, because Mayuresh, I want a sense from you on the impact that we can expect from this rare earth issue that has taken place, and also the magnets issue, because China, as we understand, controls 90% of the world's market when it comes to this. Give us a sense of what impact we could see on our Indian EVs, because on one hand, just very recently we've had the government's EV policy push come out, wherein there have been incentives to produce more EV in India, and now we have a headwind as big as this. So how is this going to play out for our sector, and how quickly do you believe Indian autos can find a fix around this?
I think the concern here largely is that the overdependence in terms of China still continues to a large extent. And therefore, I think China becomes one of the biggest drivers in terms of determining the policy as far as raw materials are concerned for a large part of the EV ecosystem. And therefore, I think when there are no diversified or alternate supply chains to probably coexist or have the quantum of supply that China can probably do, there is some element of overhang that probably comes through. You had seen that earlier as well, right? A few years back when the semiconductor issue had cropped up and companies had to go through a transition phase where there were no semiconductors in the market at all. And therefore, I think the production pipeline itself got choked. Obviously, apart from this issue, which is obviously a big issue in terms of a headwind for the sector as a whole, the overall demand dynamics have come off quite significantly. What we've been reading through in terms of our global coverage and global reports as well, the EV adoption rates have come off quite significantly. The kind of capital impairment that has probably happened on a lot of balance sheets. You talk about the Volkswagen Group, you talk about the Mercedes Group, you talk about JLR. I think a large part of their balance sheet in terms of cash flow impairment, specifically in terms of R&D for electrical platforms, powertrains, have been quite significant. And if demand comes off to a certain extent, the kind of balance sheet hit that might happen from an immediate short-term perspective can be relatively large. The last point being, let's not forget the competition perspective as well. The BYD is coming out with strong content models. They're coming out with pricing, which is very, very competitive as we speak. And therefore, I think one of the biggest markets outside the US probably remains China. EU demand is still a little bit soft. And therefore, I think the market is facing a lot of headwinds as we speak. So I think we'll be a little bit careful as we are tracking these global trends to probably be not that aggressive when it comes to EV as a pure.
All right, so that's the take coming in from Mayuresh, that how this rare earth magnet shortage can actually impact the sector. But on the bottom of your screen, just a while back, we have the news flow coming in from BEL. This stock has done very well in the month gone by, especially in the month of May. And now the news flow suggests that new orders worth 2,323 crores has come in for BEL, and hence a bit of a jump coming in. But Jatin, if I can quickly have your take on this one, where do you see the stock headed?
So overall, we believe that BEL is one stock which has been consolidating after a sharp run-up since last 1 week. So I think now the stock is poised for the next leg of up move, which can extend towards 408 to 412. So therein we have the daily upper Bollinger Band as the resistance. So we believe that there could be around 5 to 6% up move even from current levels. The crucial support is placed at 387. So risk reward quite favorable for going long even at current levels.
Okay, Jatin, while you are talking about BEL, also help us understand some other stocks that you're liking at the moment, if anything at all. What would be your BTST trade idea?
Yeah, so we have a couple of long ideas. The first one being L&T Finance. So a classical flag and pole pattern breakout, trading around the highs, closing around the highs for the day. So strong demand coming in. So we are expecting the rally to continue in L&T Finance. So that is a long idea. Stop loss should be placed at 174. And on the upside, we are expecting 191 to 193. Another recommendation that we have is from the power space, that is Power Grid. So Power Grid has been, falling in a downward sloping channel. since last 4 to 5 weeks. Now it has reached 20-week average support, and thereafter we are seeing strong buying interest. So we expect the up move to resume in power grid. So that is a long idea. Stop loss should be placed at 289. On the upside, 306 is the target area.
All right, so that's those are the two buy calls coming in from Jatin. But Mayuresh, any particular stock or sector that you believe can do well in the near to mid-term?
So I think agrochemicals is one space that we remain extremely bullish upon. I think a large part of these stocks within this universe have moved up quite significantly. The other area that we obviously like was healthcare. We continue liking that. And within healthcare, hospital stocks are something that have done exceptionally well in the quarter gone by. The expectation again here is that the kind of dynamics that are playing out specifically from a P&L perspective, they're having an asset-light model, which means the kind of bed additions that they are doing or have done in the last few quarters have largely been on an adopted asset-light mode, which has ensured that debt or leverage does not increase quite substantially onto the balance sheet. And therefore, I think as the new hospitals have started coming up and maturing, and as they reach that maturity period of 2 years, the four parameters that one really looks at in terms of average revenue per operating bed, the average length of stay, and because there is no sufficient capex that has got tied up uh, on a per bed basis, the incremental return on capital employed is significantly better as we head into the next few quarters. So generally, the space is looking good. I think the numbers have been relatively better and are expected to remain strong and steady into the next few quarters. A couple of stocks that we continue holding in our global and local portfolios is Krishna Institute of Medical Sciences, where our belief is all these aspects that I'm just enumerating should play out onto the P&L, onto the balance sheet, ultimately resulting in better ROEs and ROCs for the investor at play. And also Fortis Healthcare. The numbers had been exceptionally good for the quarter. The expectations in terms of not just the hospital business.
We've got Mayuresh on a patchy line. We'll try and reconnect that. But Jatin, what are you making of this entire real estate space? Because it seems like this sector has just been revved to revival, if you could call it that, in the last couple of weeks. And particularly want to get your chart check on Brigade as well as Sobha. Because while the other companies have been steady performers, Sobha and Brigade have been soaring in the last couple of trading sessions. How sustainable is this on the charts going ahead, and can this trend continue?
Yeah, so overall, I think the interest rate sensitives are anticipating some kind of a positive news flow from the RBI policy, and that is why we are seeing the real estate stocks, rallying since last couple of weeks. So overall, on the stock Brigade Enterprise today, there has been some amount of profit booking from the 1330 odd levels. However, what we see is that there could be some amount of consolidation that can come in post this sharp run up. However, the uptrend is still intact, and until and unless the stock slips below 1200 odd levels, we are expecting the up move to continue. On the upside, the next crucial hurdle for Brigade Enterprise is placed around 1380 to 1390 odd levels. So these are the levels that one needs to keep in mind for Brigade. As far as Shobha is concerned, yes, so Shobha also is witnessing some profit booking from the higher levels. However, the uptrend is still intact, so that could be some amount of consolidation going ahead for Shobha as well. In terms of levels, 1720 is the upside target that we are seeing, and the crucial support is placed around 1530 odd levels. So buy on dips would be the preferred strategy for both Shobha and the other stock. Overall, the trend still remains positive.
All right, so that's the take coming in on a couple of these real estate counters. Tomorrow is indeed going to be a bit of an interesting day. But moving on, even as the global markets grapple with uncertainty, Morgan Stanley is doubling down on India. Top strategists Rhythm Desai and Chetan Aya, Jonathan Garner, Upasna have called India an oasis in a desert backed by solid macro fundamentals, rising capex and a resilient services sector as well. Here's why the investment giant remains bullish on India's growth story.
India's earnings growth is right up there with the best in the world. And a key point we also make about the Indian financial system at the moment is that bond yields are not volatile. 10-year yields are very well behaved and actually trending downwards in India. And equity market volatility is now well below the average in global equities. The systematic investment plans, the SIPs, and other domestic flows kind of drive that. It's just a very strong story.
If you do a little bit more intrinsic valuation, stocks are cheap. And this is not something that people outside India have completely understood, which is why they are underweight. I think India is in this, is what I term as the oasis in a desert. I suspect as we go into the second half and beyond that, and there is some stability in US policy, corporate issuances will pick up. And that will give an opportunity for foreign investors to continue to engage in Indian stock markets.
India is relatively insulated to the extent to which its exposure to global goods trade cycle is much lower than everybody else. And at the same time, it has this structural domestic demand story, which is also much stronger than the rest of the region. And if you see the trajectory of Indian government, both center plus states taken together, revenue expenditure versus capital expenditure, both the lines are moving in the right direction. Over the last 5 years, we've seen a consistent decline in revenue expenditure to GDP, and that has been taken as an opportunity by the government to increase its capital expenditure to GDP.
With the inflation outlook remaining benign, as I mentioned, you'll see readings closer to say 3.5% in the next few months. And even if you look at 1 year forward inflation forecast, they'll be pretty close to 4%. So, RBI will be comfortable that inflation is durably aligning with its medium-term target of 4%.
Okay, that's the word coming in from the panel of experts at Morgan Stanley. But we have Mayuresh back with us. And Mayuresh, I don't know if you heard Rhythm Desai just say that he believes that valuations in the markets are fairly priced in right now. Would you concur with that view, or do you believe that the market is at a level where you have the negatives priced in, but also the positives are largely priced in as well? Is that the view you hold right now?
At the juncture, yes. But I think if you have some element of crystal gazing over the next 4 quarters, both from a macro as well as a micro perspective, I think India probably seems to be better placed than most economies across the globe. Our macros are standing out on a whole host of parameters. Our banking system is very robust as we speak. The asset quality pressures across the banking system have come off quite significantly. There is ample liquidity that RBI has provided. There is expectations that there might be a 25 bips rate cut tomorrow as well. And therefore, I think from the macro perspective, including how the government is probably spending on its capex account, is significant enough. Along with the other drivers, including the tax cuts that have happened, better monsoons that can drive total consumption and ultimately drive macros to a large extent. So I think the second half, where everybody has a focus for the last so many years as far as India is concerned in terms of earnings recovery, can it be different this time around? Our own sense is that looking at how earnings have shaped up for the quarter gone by, earnings should remain resilient and come back very, very strongly this time around in the second half. And therefore, as we speak, valuations are fair. But as earnings pickup starts happening at the latter half or back-ended as the financial year probably culminates, we're probably going to see a much better effect come through as far as the overall numbers are concerned, and therefore a better rating as far as the Indian economy is concerned as well. So remain optimistic in terms of the premium valuations that India is probably.
All right, so remain optimistic on the India growth story. But other than that, we are heading for almost a decent close for the markets, because Nifty is very close to that 24,800 mark as well. And on an intraday basis, we did cross those levels. But it's big boy Reliance as well that has been lending support. But Jatin, quickly, if I can have your take on Reliance. Where do you see the stock headed? Can we expect to build on to some more gains from these levels?
Yeah, see, in the case of Reliance, there were multiple hurdles which it has crossed. 1430, 1425 was a strong hurdle that it was unable to cross. However, today it has given a very decisive close above the 20-day moving average. So now it's very close to its recent swing high of 1460 on the upside. So I would believe that there is the positive momentum is likely to continue in the case of Reliance. At least the price action today is suggesting that. So we are expecting the up move to continue. In terms of levels, 1480, 1490 is the level around which we are expecting this rally to continue. And on the downside, the crucial support, which was the crucial resistance, which was acting as a the crucial level which was acting as a resistance will now act as a support. So 1430, 1425 should act as a strong support, and on the upside 1490 is the target area.
Jatin, thanks for that review. But before we let you go, very quickly, could you give us a sense of where you expect tomorrow's market to open in the morning? Are we expected to continue being range bound?
Yeah, so I believe tomorrow's opening would be on the positive side, considering that we have held on to the 24,700 mark. So we are expecting the Nifty to open on a positive note. However, post that, until the announcement comes, we can expect a range-bound price action only. So positive opening, post that some range-bound price action is likely.
Opening, but continue to be range bound from there on is the word coming in from Jatin. Mayuresh and Jatin, thank you so much for joining us, and thanks for speaking to us.